Microsoft has a huge deal coming up. Peloton is in some hot water. The market is not doing well. And lastly, Goldman Sachs is even down over 8% on the day. What in the world is going on? Let's talk about it. Microsoft has made a deal to buy Activision for $68.7 billion. It's an absolutely huge deal. Microsoft wants to acquire Activision because they're looking to compete with Meta, aka Facebook, in the metaverse. And right now, Microsoft has Minecraft, it has a few other game makers, but Activision would be its largest acquisition. Stock prices surged for Activision this morning up to $85 or even a little higher when it was announced that Microsoft would be buying each share for $95 when they close out the deal, given that is still in 2023 if the deal is able to go through. The markets are absolutely tanking. S&P 500 is down about 1.5%, Dow Jones at 1.3%, NASDAQ over 1.6%. Peloton just hired Mekenzey. If you don't know who Mekenzey is a huge consulting company. Peloton is hoping that Mekenzey and Co can help them review their cost structure and just overall take a larger lens on the company and look at it, kind of dive in some areas and hopefully turn it more profitable. Goldman Sachs stock is down pretty significantly today at 1.8%. This is a concern because their costs have gone up over the last quarter and their price per share has gone down, or profit per share has gone down. This is not looking too great. They're a large company, right, that invests tons of money. And if they aren't finding profitability, if they're having higher expenses, this is kind of a bad outlook on the whole market together. Now, the market might be exaggerating ever so slightly, as it usually does when there is bad news about a company or even slightly bad news about a company. It is something to look into and to keep an eye on to really see as we enter this earnings season for companies, what is the profitability? How are they doing? Are they having higher expenses, just like Goldman Sachs has reported today?